Talk some of the big tech stuff. With me in the studio, Jenny Horne, host of Next Gen Investing, with some big names on the radar, Tesla and Apple. Jenny, let's talk Tesla here, because it is kind of one of those that fits the overlap between Trump and stocks. And we saw Elon doing a couple of his Elon pumps at the inauguration. Did you see that in the corner?
The memes that are coming out of this inauguration are incredible. I mean, especially regarding Elon Musk. But of course, he's been the biggest beneficiary of this Trump bump. So now what does that mean for the stock? Especially considering that in his inaugural speech, Trump did say that he plans to end this EV mandate and that he's going to right now revoke so many of these various, basically the Green Deal that will benefit some of these traditional auto companies, which he says this is sacred pledge to their great American auto workers. But the mandate he's referring to is the EPA rules that require that these automakers sell battery EVs to avoid these hefty now really emission-related fines. So that doesn't end the mandate entirely, but it is thought that per state, like right now, the California Air Resources Board, or CARB, regulates California's emissions. That's a pretty substantial portion of Tesla's zero emission, like, really gains. So that is what I think is of the concern, is like, sure, maybe federally we'll see less benefit. Also, the thought is it could end the $7,500 tax credit that benefits the EV world. I think this is way more of a concern, though, frankly, if you talk like your Lucids, your Rivians, less Tesla, because it all depends on where you see like the growth of this company, frankly, because there's ironically a note out today out of Piper Sandler that highlights actually more of its AI push. So if you're of the thinking this is an AI play and we'll continue to see a run up in the AI story, this is a benefit to Tesla. But if you see it as truly an EV, a car maker, you'd say that there could be some turbulence under this new administration. Well,
it's a little bit of twisted logic, because it's going to, the lack of an EV tax credit is also going to diminish Tesla's demand. The idea is just that they can handle it better than these other nascent companies who don't really have the financial wherewithal to operate maybe without that initial incentive for their customers. So it is a little bit of like shooting yourself in the foot to some extent, but that's the logic the market's going with. And even though I feel like it's easy to dispute some of that, the price has told us otherwise. And it seems like Wall Street believes that it's going to continue, right? This is a pretty big price target this analyst put on it.
Yeah, $500 a share from Piper from 315, or about 17% above where we're actually currently sort of trading. They think that there's the potential for this massive real world AI opportunity. And as a result, they do entertain more of these upside scenarios, saying that this is their number one buy and hold idea. And they did concede the first half of this year will be choppy, which I think has historically been the case for a name like Tesla, especially, again, given the ties to a new administration, but did say that the long-term narrative they believe is taking a back seat when current year estimates are falling. And in this regard, they still do see the outlook remaining highly uncertain, but believe their financials really rely on these two metrics, vehicle deliveries and automotive gross margin. The outlook for the former is uncertain, they said, given, again, the timing of some of these new products. But I do think that when you look at estimates, we're expecting more and more, like they're expected to deliver just shy of 2 million units in 2025, up from 1.8 million in 2024. We're also expecting more than 100 million units of the other unknown vehicles and 70,000 of these Cybertruck units. So these are all, I think, hugely important, but also the fact that this is more than that now. This is also like an alternative battery company. This is also, I mean, like a push into some of the, I know the green energy trade is right now a bit of a mixed picture, but also AI, autonomy. I mean, FSD, robotaxi. There's a lot more.
Don't forget Mars.
Yeah, don't forget Mars. The only thing I think that is like of the concern is Elon Musk is spreading himself so thin. But I guess I also somewhat like trust the fact that with him being so much in President Donald Trump's ear that I can only imagine this being favorable.
That's what I'm saying, is that like even though Mars has maybe got nothing to do with Tesla, it's just I think the market's basically going, he's there in the back corner of every meeting. Let's not sell his stock. Let's talk Apple real quick. Hit me with this note, because it's pretty negative actually from a couple, right?
It is. So the concern really from Jefferies is the iPhone demand has already materialized. They basically think the AI hype is not enough to drive like this massive, massive demand for the iPhone 16, lowering their price target by 13% to $200.75. This is still, though, optimism for the potential for AI has been like a massive force of the AI story and the Apple story, frankly, of the last year. We pulled back about 10% now over the last month. Loop was another another one today, downgrading shares, highlighting supply chain checks pointing to lower demand. I will say, though, because this felt oddly similar to what we talked about last year, 2024, the first 2 weeks of the year, we got two very similar. Honestly, the language was even similar. Downgrades from Piper Sandler, Barclays, who highlighted all of this AI weakness. And then we went on to have a pretty fantastic year. January is historically the second worst month for Apple stock. So I look at this as like, we've been here before. We've seen this pessimism. I think
thought this was coming. We talked about this coming into January.
iPhone 16 and the AI push has not really been received super positive. And that's, I think, what was mentioned over and over is that so far we're not seeing this really drive like material business because it doesn't change and improve the product that significantly. I think that this is probably a necessary call. But again, historically speaking, January is not a great month for Apple. So expect some of this volatility.
All right. It's been a pretty rough couple of weeks there for Apple. So definitely a little bit of a blight on the market this morning with Apple down and negative commentary, but we got enough working elsewhere to keep us up. Thanks, Jenny, for a look at big tech there. Appreciate it very much. Tesla in the good graces of the market as it looks for Trump trades. Apple under some pressure, though.